It's time for Talk Law Radio with Todd Marquardt. Todd Marquardt, attorney at law in Texas. If you're a millionaire or a thousandaire, Talk Law Radio is now on the air. Call in with your business law question, your elder law question, veteran aid, Medicaid, build a business to get paid. 210-308-8867. Or ask a question online at marquardtlawfirm.com. That's MARQUARDT lawfirm.com. And now it's Talk Law Radio with Todd Marquardt.
Welcome to Talk Law Radio. I'm Todd Marquardt. What if the people that you love the most had one of the hardest days of their lives without the help that you meant to leave them? I'm going to be talking about life insurance today. What if you had a child that was forced to sell the family business just to keep the peace? A spouse who suddenly can't afford the life you've built together. A special needs loved one who loses the support they need because one form was filled out wrong. These aren't dramatic movie scenes. They're the quiet disasters that happen every day when life insurance is left out of the estate plan or structured the wrong way. This week, we're having the conversation most families avoid until it's too late. We'll walk through 5 real-life situations where life insurance becomes the difference between a family that stays whole and one that quietly falls apart. If you've ever said, "I'll take care of that later," this episode is for you. We're on KLUP 930 AM and KSLR 630 AM in San Antonio, also KNTH 1070 AM and 103.3 FM in Houston. Howdy. We're also on Facebook Live, YouTube, and on talklawradio.com. First, let's check in with Joseph Warren, who owns Financial Planning HQ with his father and brother with the Financial Focus. Financial Planning HQ doesn't sell investments or insurance. They provide a planning service that helps financially successful people reach their financial goals with less time and stress, so they don't have to deal with money managers and CPAs who refuse to communicate with one another. Joseph, you spent years inside the financial industry and then built your own firm.
Yes.
What's the most shocking thing you learned along the way? Take us back to the beginning.
Yeah, when I think about when I started, back in 2014, I started as an intern working with my father and my brother at a large insurance company. And at that time, what I realized is that conflicted advice is the norm in financial services because it's usually incentive-based on either collecting assets or selling insurance products. And don't get me wrong, I don't think there's anything wrong with selling insurance or even investments, but I feel that the optimal way to run your business is to be incentivized for giving the best advice possible. So when I started at that large insurance company, there was a lot of talk about financial planning being the focus. We're all about creating financial strategies and giving the best advice to our clients. But once you got on the inside, the internal meetings were not about that. They were about quotas, how much insurance products you could sell, or other financial products you could sell. The metrics of success and the hierarchy was based on that as well. And we really were starting to have the shift in our business where we wanted to focus on financial planning, giving the best advice possible. Because we felt that as things progress, with AI being the way it is, as technology progressed, people were going to want a solution for their finances that would really help them to make the best decisions possible.
Okay.
Yeah.
Joseph Warren from Financial Planning HQ is here with me talking about how he started his own independent financial planning business. Mm-hmm. Joseph, when I started Marquardt Law Firm 17 years ago, I had to decide what legal resources to use to create, design, and build estate plans for my clients. Mm-hmm. And I realized there were better resources out there than what my former boss was using.
Yeah.
Did you have the same shocking experience?
Yeah, we did. I have a few stories I want to go over, but one thing that became very clear when we became independent was our financial planning software changed. And we were kind of puzzled, like, why did our software become a lot more capable? And we called, we work with eMoney Advisor. So we called eMoney Advisor. They, help us to run the financial simulations. And we asked, why do we suddenly have all these extra capabilities? And they said when you were with that insurance company, you had a limited version. And they really had a scaled down version of the software. Mm-hmm. So the focus would be selling products and gathering assets. And so we wouldn't waste time, on the planning and really giving the best advice to the clients. So what I realize is everybody talks about financial planning. Everybody talks about giving the best advice, but the actions are different. I think I love that this is we're on Christian radio, and right. I think of the wolf in sheep's clothing. I also think of analogies where, kind of have hollow sayings like, we're all in this together, which you heard during COVID.
Right.
And it's like, that's good PR, but really the bottom line and the profit in selling products was the main focus.
And so what questions can people ask their advisor to figure out if they're a wolf in sheep's clothing?
I don't want to be too alarming because I think people have good intentions, whether they're doing, selling insurance. But there, of course, are people like that. And I want to give some examples of things I've seen and some questions that would have rooted that out.
Okay, so Joseph Warren with Financial Planning HQ is here. Can you give us a couple of real-world examples of problems that you saw in a large insurance company and the business model that they have before you started working with as an independent company planning for people?
I think one thing I saw was when people were unlicensed to do anything except sell insurance products or things like that, then everything they wanted to do was under the lens of financial products that were overly complicated, that paid large commissions, things like annuities and life insurance. So you want to make sure that the person can give you access to a broad range of financial products and investments. So you should ask them, how are you licensed and what do those licenses allow you to do? Mm-hmm. Is there anything that you're missing when it comes to licenses that might limit the advice you give me?
That's a great question.
And another thing I've seen is people buying products they don't understand that kind of blew up later. An example is universal life can be very, very useful, but I've seen where people were selling those when interest rates were 10, 15%, and they weren't doing the service work of keeping up with the policy and the client. And the policy ran out of cash value, the cost of insurance kept rising, and the policy expired worthless. And I've had a very sad meeting with an older gentleman who was just kind of, it was hard to talk to him because he was just so distraught about it. Mm-hmm. And it was because he didn't understand what he bought. So I think anytime you're getting sold a financial product, ask what purpose does it serve? What are some risks in this product? And why did you choose it for me?
I've had clients with that exact same scenario. They think that the insurance agent or the insurance company did something wrong.
Yep, and often when we saw that, the person who had sold it was long gone. I mean, they may have been in another industry doing something else. The saddest was when I saw someone put all their money into an expensive annuity, and annuities are famous for having high fees, and one of them is the surrender charges, where it can lock up the money for 5, 7, even 15 years. And he had a financial emergency, and all his investments were locked up. And he had to pay penalties. So the insurance person who sold him that made $80,000 probably in commission. It was about $1 million or more, but he had to pay tens of thousands of dollars in penalties to get access to his own money.
Right.
Yeah. That was one that really made it clear that we need to go our own way and become independent so we can give the best advice possible.
If somebody's interested in talking to you about your independence and getting the best advice possible, how can they reach you?
Yeah, I just want to talk a little bit about the best clients to work with us are people who really value seeking the truth and the best advice possible. We work best with financial delegators and people who value simplicity in their planning. And we look to coordinate all the financial experts in your life because we know the CPA is not going to get together with the estate planning attorney and make sure everyone's advice is aligned. So we really want to take you from conflicted advice to harmony, where we may have disagreements behind the scenes with those financial experts, but we come to you with one clear strategy. You know exactly what to do. So if you want that clarity, the first step is a no-obligation meeting. It's an experience called the Financial Roadmap. And we sit down, we talk about all the things that are important to you. We talk about your goals. It's not about us at all. It's something we say a lot. Not about our credentials, not about our history or our years of experience, but really we learn all about you. And we give you this tool that will be useful when making financial decisions, whether you work with us or not. And if you want to do that, the number is 210-748-6699. Again, that's 210-748-6699.
We have to take a break, but stay with us as we talk about the kind of life insurance that's right for you and how much you should get on Talk Law Radio. Are you confident about your financial future? What if you had a clear financial roadmap and a team holding you accountable to make the best financial decisions no matter what? At Financial Planning HQ, Steve and his sons, Joseph and Jacob, have been helping San Antonio families since 1987 with inspiring, intelligent financial strategies. Whether it's achieving or maintaining financial independence, becoming more tax efficient, or building business wealth, we create a comprehensive, written lifetime financial strategy that's uniquely yours, based entirely on what's important to you. Don't leave your financial future to chance. Call Financial Planning HQ today at 210-685-2722. That's 210-685-2722. And take the first step towards financial clarity. That's Financial Planning HQ, inspiring financial strategies for San Antonio. Remember, 210-685-2722. I'm Todd Marquardt. A lot of people think trusts are only for the wealthy, but that's simply not true. If you want to avoid probate, maintain your privacy, protect your assets, or make things easier for your family, a trust might be exactly what you need. I'll help you understand your options and decide what's best for your unique situation. Let's talk. Call 210-530-4278 or visit marquardtlawfirm.com today. Do it before you die. Welcome back to Talk Law Radio. I'm Todd Marquardt here with Joseph Warren. We're going to be talking about life insurance. And if you have a question, you can call the show live right now. Today is Saturday, August the 1st, 2026, 210-308-8867, 210-308-8867. Tell us a horror story that you have about life insurance, or call to share a positive experience about how life insurance changed your life. Joseph, most people treat life insurance like it's the broccoli of estate planning.
That's true, yeah.
They'd rather talk about almost everything else other than life insurance.
Yeah.
So I'd like to flip the script on that today and talk all about life insurance, including life insurance for business owners, for parents with minor children, life insurance for people who have a beneficiary that's disabled or has special needs, and life insurance for someone that is land rich or cash poor and might be facing federal estate taxes.
Yep, all great uses of it. And that broccoli analogy is amazing because when you're a kid, broccoli tastes gross and you don't care about it. But as you get older, you kind of develop a taste for it. And I've noticed that with life insurance. As people get older, the demand for life insurance increases.
Right. Well, they start to think about their mortality, I think.
Yep.
And what am I going to leave to my beneficiaries? And I always ask people, what do you hope they'll achieve by receiving an inheritance?
That's a great question. Yeah, what's the purpose behind it? Like, what do you want this money to do for you and your family?
Right. So the first scenario is for business owners. If you're a business owner out there, give us a call at 210-308-8867 and ask a question about how life insurance might be needed for your business. You've been working with business owners and other families doing their financial plans. Have you identified any situations where a business owner might need life insurance?
There's a few. I would say, buy-sell agreements is related to estate planning as well, but making sure if one partner were to pass away, that you have a structure in place where they would have the funds. So really you're just thinking about using life insurance as a funding vehicle to purchase the shares or purchase the portion of the shareholder who passed away. That's one great use, is kind of as a funding vehicle that's needed when one partner passes away.
Yeah.
Yeah.
This is Talk Law Radio. I'm Todd Marquardt here with Joseph Warren with Financial Planning HQ. I like to think of life insurance in a business owner's hands as the peace treaty.
Yeah.
Because if I have a partner or a co-owner of the business and I die, well, my wife or my kids would inherit my share of the business.
Yeah.
So now they're the owners.
Yep.
And my business partner might not want to be co-owners with some unexperienced people.
Yeah.
And so we use that life insurance policy to buy their share of the business so my business partner can have 100%.
It's a perfect solution for that buy-sell because also your wife and kids may not want to run the business.
Right.
They may not have the capability of doing so. And with that, you can really structure a succession plan so that when you pass away or if your partner were to pass away, that the business would pass seamlessly to each other. And you have the funds available right when you need them for that situation. So.
Right, and the family gets their inheritance. They get full value, and they're not stuck with running a business that they don't know how to run.
Yep. I was looking at some interesting research on buy-sells, and there was actually a time, there's different ways of doing it, a cross-purchase, but that can get very complicated. So say you had two partners, you would really just need to purchase insurance on each other. But with a cross-purchase, if you had 5 partners, the number becomes 5 times 4 because you have to get insurance on all the other partners.
Right.
That's 20 policies right there.
Wow.
But there's a way of structuring it, which was entity-based. But that had problems because the IRS said recently that that counts towards the estate.
Right.
So
full value of the policy.
Yep. So that pushed some people where they had to pay an extra, $900,000 because they were hitting the estate tax threshold back in, I think it was 2013. And there's solutions, and I'll let you speak on that, where you can structure it perfectly where the life insurance doesn't hit the estate, the business gets a step up in basis, and it passes seamlessly to the partners. And, of course, I'm going to let you speak about that because that's estate planning. That's not my forte. But
Yeah. Well, I don't want to get into the weeds on that one, Joseph, but another scenario where a business owner would want to have life insurance is if they had an employee that was highly skilled and very knowledgeable and would be difficult to replace.
Yep, key person insurance is something I've just recently recommended for one of my clients. And on that one, you look at what would it cost to replace that employee. It could sometimes be an owner as well, with thinking it's going to take downtime of about 12, maybe 1 year to 2 years to replace them. What's their economic value to the company? Sometimes they use multiples of how much they get paid and their bonuses. And with that, you make it so the business can really withstand losing a very important employee.
Yeah, and you don't want your business to tank just because you lost somebody, and so that provides funding while you look and post the want ads.
Yep, while you're looking for that replacement or filling in for that gap. Yeah.
Okay, what if a business owner had children that one of them did work in the business and other children that didn't work in the business? How are you going to equalize giving a gift to each child?
Yeah. I'm curious how you deal with that because I haven't really seen that too often.
Oh, I had a client that we dealt with that, and life insurance was part of the mix.
Yeah.
Because the son was going to get the business. He was working in it, and they didn't want to give the daughter the business, who was totally unfamiliar with it.
Yeah.
But they used life insurance to focus more on the daughter, give her the money.
To equalize it.
Right.
Yeah, I've heard of you doing that in a few scenarios where you kind of equalize the estate as well using life insurance. But, yep, that's a good use.
Let's talk about families with young children. If you have a family with a minor child out there and you have life insurance, did you name the baby as a beneficiary of that policy? If so, give us a call at 210-308-8867 and ask a question live on the air today, Saturday, August 1st, 2026, by calling 210-308-8867, 210-308-8867, or post a comment on YouTube. You can find this video on YouTube sometime next week and watch it while you're walking the dog, working in the garage, or washing the dishes.
Yep, definitely.
So have you ever been reviewing somebody's life insurance policy and just happened to see that the beneficiary they named was their minor child?
I have seen that, and that would usually prompt a call right away because the child cannot inherit that money. Yeah.
Right. So what happens behind the scenes in the back office at the life insurance company when that does happen?
Sometimes, at those large companies, we would see people's policies and we could be able to see the beneficiaries and everything. And that was a red flag we would search for. And I'm not sure how it happens, but I think it kind of happens from maybe them losing touch with their insurance agent, maybe the insurance person not paying attention, or them doing it on their own.
Yeah.
But when you do that, the kid cannot inherit the money. So
right. They have to be at least 18 years old.
Mm-hmm. But a trust is a great way to get around that, so you can
right.
put it in the trust. Yeah.
Right. So in order to name your trust as the beneficiary, you have to talk to an estate planning attorney to get a trust.
Definitely, yeah.
Yeah, so what happens is the parent submits the claim form to the life insurance company, and they say, oh, we can't pay this out. So you either have to wait 18 years or you have to become guardian of your child.
Yeah.
Of your own child. You have to go to the probate judge and say, I need to be guardian over my child's estate so that I can receive this life insurance money. Wow. And parents are totally flabbergasted by that because I'm already the guardian of my child.
Yeah.
Yes, but you have a legal requirement to take care of and provide for that child using your money. That life insurance is the child's money. And so you can't use that to buy food and clothes. You can use it to pay for his or her education or field trips or summer camps or private lessons.
Yeah.
But you can't use it for food and shelter.
Yep. That's one of those red flags I remember we used to look at, as well as no beneficiary was another one.
Right. I've had a client that her husband died and he had a retirement plan with his company and there was no beneficiary.
Yep.
And she said, how did this happen?
Yeah.
I said, I wasn't there. And I said, maybe the HR guy didn't check and maybe he didn't ask.
Yeah.
But, nowadays a lot of my clients are making elections on their life insurance policy online. So that means they are doing things themselves, and they might be making mistakes.
It's possible to make that mistake, and it seems innocent to put your kid on there. Another thing is just forgetting to update it, and that's why the service is important, and also keeping up with your policies over time is important because you could have an ex-spouse or somebody on there that you don't want inheriting money, and I've seen that as well. That's another red flag.
Another thing that I see, Joseph, is somebody who names the godfather or the godmother as the beneficiary of the policy. And they say, oh, but that's for my child.
Oh, yeah.
They're going to be the guardian, and so they're going to get the money. But that's just wishful thinking.
Yep.
Because they don't have any obligation to be guardian for the child. They can just take the money and run.
Yeah, legally they could go to Vegas. It's their money.
Right.
It's not. There's nothing holding them to that, and that's why that trust structure, I think, and estate planning is so important.
Yeah. So if you left a life insurance policy to, say, your sister or brother, and you hoped that it would be used for your child, but they used the money in Las Vegas and gambled it,
Hopefully not.
Wouldn't you just roll over in your grave?
Yes, that's not what anybody wants. Yeah.
We got to take a break. We're talking about life insurance on Talk Law Radio. And stay tuned, because next is Sinners and Saints, and you're not going to want to miss this. Welcome back to Talk Law Radio. I'm Todd Marquardt. Today we're talking about life insurance, the broccoli of estate planning. But this segment is all about sinners and saints. That's a mighty fortress is our God.
Oh, wow.
It's a great hymn. So I like to talk about the sinners and the saints. And the sinner this week is a guy named Ross Lawrence, who killed his parents with a sledgehammer.
Oh, no.
And the reason I brought it in this week is because he was the beneficiary of a life insurance policy.
Wow.
And there's a law under the Texas Insurance Code that says that you're not allowed to benefit from a willful ending of somebody's life. Mm-hmm. And so it ended up in court because Hartford Life and Accident Insurance Company said, we think that this money is going to be fought over in court. Mm-hmm. And so we don't want to be a part of it.
Yeah.
And so they filed a petition to interplead and just deposit the policy proceeds into the registry of the court.
Wow.
And then they're out of it.
So the court just deals with it. Yeah.
And then so the decedent's brother, Robert, he said there's no contingent beneficiary besides Ross, and the insurance code says that the policy should go to the nearest relative. Mm-hmm. And he said, that's me.
Yeah.
Because Steve was the deceased person. Robert said, Steve and my parents are already deceased. Mm-hmm. He has no children other than Ross, the person that killed him. And there's nobody else.
Yeah.
So I should get the proceeds.
Yeah.
Well, there was a dispute about that, but the example I want to focus on is just that if somebody kills you for your life insurance money, Texas law protects against that.
Wow. That's good to know. That's a dark story.
It is.
They also have rules I remember with suicide. In the first 2 years, that doesn't count. They won't count suicide because then people would get the policy, and this is dark as well, commit suicide if they needed money. So they have that as well. Yeah.
Right. So don't do that.
Yep.
Another interesting aspect of the case is that Ross was deemed incompetent to stand trial. And so he was in like an insane asylum. Mm-hmm. And part of the case was, how can he be deemed to have willfully brought about the killing of his parents if he hadn't been convicted of the crime yet?
Yeah.
And the court said, no, it's okay. We can decide that in a civil court. Mm-hmm. We can find that there was enough evidence, a preponderance of the evidence, to find that he brought about their murder. In fact, a neighbor witnessed it.
Wow.
Can you imagine the trauma of the neighbor seeing that go down?
That is just, that's horrible, yeah.
Okay, well, I've probably spent too much time terrifying you with that story, so we'll talk about the saint, St. Augustine. The reason I'm bringing up St. Augustine this week is because some archaeologists found 2 of his sermons that they had never seen before.
Wow.
And one of the sermons was about how Saul asked for a medium named the Witch of Endor. Mm-hmm. And I don't remember this story. If you're listening right now and you know about Saul and the Witch of Endor, call the show right now at 210-308-8867, 210-308-8867, and tell us about the story of Saul and the Witch of Endor. What I remember, or what I read this morning, is that Saul had turned his back on God, mm-hmm. and he was worried that the Philistines were going to attack. And so he prayed to God and said, I need your help. And God didn't answer like he usually did. Mm-hmm. And so Saul asked for this medium, the Witch of Endor, to tell him what to do. And then Saul died.
Yeah, you just sparked my memory. I think it's almost like he does like a seance is the word for Samuel, I believe, the prophet.
That's right. That was part of it. He was wanting the prophet to tell him what to do.
Who had always told him, it's his fall from grace for sure, yeah.
Mm-hmm.
Yeah.
Okay, well, let's get back to life insurance. This is Talk Law Radio. I'm Todd Marquardt here with Joseph Warren with Financial Planning HQ. He doesn't sell life insurance, but he knows a lot about it because it's one of the tools in a financial planner's tool chest. Yep. So if you don't sell it, what do you do?
Same thing we do with the CPA. We refer out to independent experts. So we have an independent broker that we'll refer to who's very good. We also have someone who works nationally who's actually an expert witness in life insurance who we'll get for more complicated cases. And we'll have them look at the existing policies, say, does this client need this? What purpose does it serve for them? And if with any recommendation that we make, again, we have that team, that mastermind of experts, mm-hmm. and we make sure they're all aligned and everything's protected.
A very complicated policy that I saw one time was where this business owner got a loan from the bank mm-hmm. to pay for his life insurance. Mm-hmm. And most people don't do that.
Yeah. That's interesting. Was it a situation where he was paying to keep it going because he was running low on money and maybe he was sick or something?
No, it was just part of his business. He owned all this real estate, and so he needed a very large policy to cover the outstanding loans.
Oh wow, that's an interesting way of funding it. But yeah, that's it makes sense. A lot of businesses finance things. That's a part of how you grow as a business. Mm-hmm. So if you really need the insurance, you could use a loan to do that.
Yeah.
It's got to pay it back.
Yeah, that's right. Okay, so some other situations where life insurance might be useful is if you want to benefit a charity, but you don't want to leave anything less to your family.
Yeah.
You have any clients that ever wanted to do that? Say, all of my retirement, that goes to my spouse. All of the properties, that goes to my kids. But I'll just take out a life insurance policy to leave it to my church.
Yeah, I haven't seen that yet. A lot of my clients give. They kind of do the give while you live. I have clients who tithe and give to the mm-hmm. church and different causes, and usually our framework there is just how can they get the most tax benefit for their giving is what we look at. But it definitely can be an estate planning tool, and I've heard about it. My alumni, I used to go to Schreiner University. They talked to me about that as something you can recommend is giving a part of your inheritance, leaving a life insurance or an insurance product to them as well.
Mm-hmm.
Yep.
Another situation is if you have a disabled child or family member or somebody with special needs, and you know that they're not going to be able to work and earn a retirement, and they're probably still going to have a long life. How are they going to survive if they don't receive an inheritance?
Yeah.
Well, you don't want them to be disqualified from the government benefits that pay for all their health care.
Yeah.
And the tool to make that work is a supplemental needs trust, where they're not going to be disqualified from their government benefits so long as the inheritance goes into the supplemental needs trust.
Yep, and the life insurance is a great funding vehicle for that, and usually we'll use something like a second to die. So when both spouses pass away, it'll pay into that supplemental needs trust, and the special needs beneficiary keeps their Medicaid, SSI, and all that, but their supplemental needs, those things like clothes, other things they need, can be taken care of with that trust.
Right. So the government benefits are supposed to pay for food and shelter, and then the supplemental needs supplement the food and the shelter for things like education, enrichment, entertainment, cell phones, transportation.
Yeah, that is something we see more of, because I know Steve had a focus on special needs planning. I have a client who does, we do some special needs planning for it. And it's very important, and it can be tricky. It's something that's tough to navigate on your own, making sure they still qualify for those benefits.
Yeah. Well, we got to take a break. We've been talking about life insurance for families with minor children, for business owners, for people that have a loved one with special needs. We talked about life insurance for charities. And when we come back, we're going to talk about life insurance to help pay federal estate taxes when you're land rich but cash poor. Stay tuned. Are you 100% confident that no matter what happens in the financial markets, economy, or world events, you will achieve your financial goals? If not, we have a process to get your financial house in perfect order and keep it that way forever. Your financial future shouldn't be a guessing game. Planning, advice, organization, and accountability are deliverables you should expect. For over 35 years, Financial Planning HQ has been San Antonio's trusted partner for comprehensive written lifetime financial strategies. Steve and his team, including sons Joseph and Jacob, don't believe in a one-size-fits-all approach. Instead, they create a personalized financial roadmap for you based on what's important to you. As an independent registered investment advisor, they're not tied to any big corporation's products. They work for you, creating inspiring, intelligent financial strategies that put your interest first. Call Financial Planning HQ at 210-685-2722. That's 210-685-2722. I'm Todd Marquardt. A lot of people think trusts are only for the wealthy, but that's simply not true. If you want to avoid probate, maintain your privacy, protect your assets, or make things easier for your family, a trust might be exactly what you need. I'll help you understand your options and decide what's best for your unique situation. Let's talk. Call 210-530-4278 or visit marquardtlawfirm.com today. Do it before you die. Welcome back to Talk Law Radio. I'm Todd Marquardt here with Joseph Warren with Financial Planning HQ. We've been talking about the broccoli of estate planning.
Yes.
That's the life insurance, something that's good for you that you really don't want.
Yeah.
So we talked about a lot of different situations: life insurance for parents with minor children, life insurance for business owners, life insurance for people who have a beneficiary that has a disability or has special needs. And we talked about life insurance to leave a gift to charity. And another situation where life insurance is important is if you're land rich and cash poor. Mm-hmm. So I have had some of these clients over the last 19 years who have big ranches.
Yeah.
And they either use it for recreation or they use it because that's their business. They're cattle ranchers. and it's very valuable.
Yeah.
But they don't have a lot of money in the bank. You know, they're just working, and they provide for their family and themselves, and they want to leave the land to the family after they pass away. Well, if the value of it is over the federal estate tax exemption, how can they pay the estate tax?
Yeah, that's a great question. If they're over that limit, you would calculate the need based on, I think it's 40% the estate tax, and the amount that they exceed it. And the reason you're doing that is so they don't have to do a fire sale on their business or their farm or their land.
Right.
And again, the life insurance is becoming like a funding vehicle. So you use permanent insurance, so it pays out no matter what, how long you live, to pay those estate taxes so that you can keep those assets that are illiquid.
But here's another problem, Joseph. Even though your beneficiaries can receive life insurance income tax free, the value of the policy benefits counts against you for federal estate tax purposes. It's included in the gross estate. And
then that's where you come in, because there's ways you can, trust and things you can set up.
That's right. The Irrevocable Life Insurance Trust, also known as ILIT, I-L-I-T. When you put life insurance in that kind of a trust, it's outside of your estate.
Yep, it's outside your estate, so you don't get that circular calculation where you keep having to pay more taxes. So,
right, keep having to get larger policy because the value of the policy counts against you.
Don't do that, no.
So this is a specialized tool that you need to work with both an estate planning attorney and a financial planner to get the right policy and make sure that it's actually owned by the trust.
As things get more complicated, it's important to have a team of experts who are coordinating, like we talk about, because there's crossover issues like this, and you want to make sure that everyone's on the same page, that the advice is not going in two different directions. So
right, and there's maintenance that has to be done on the Irrevocable Life Insurance Trust. Usually, the way it works is the amount of the premium that is paid, that's a gift to the trust, because then the trustee makes the payment.
Yeah.
And so you want to have crummy letters.
Yep.
And this is another weird thing that the audience is probably going to be confused about. Crummy was the name of the court case where the IRS said that these gifts would be excluded for gift tax purposes.
Yeah.
So the crummy letter is a letter to the beneficiary that says, I'm going to make a gift to the trust, and you can withdraw the money if you want. But if you do, then the premium's not going to be paid.
Yep.
So the crummy beneficiaries, they don't withdraw the money.
Yep.
Because they know that life insurance policy is needed to pay the estate tax.
Yep. That would ruin everything for everybody if they did.
It would.
Yeah.
And they'd probably be disinherited if they did that. But you have to make it clear that they're allowed to, even though you don't want them to.
Yeah. Yeah, it's interesting, but it shows the power of when you combine the risk management, insurance with financial planning and with estate planning. You have something that is a solution that really works for you and your family for generations.
Right. So because we're talking about needing a lawyer and a financial planner, I want to remind you that Marquardt Law Firm sponsors the show. Attorneys at Marquardt Law Firm focus on business and estate law, including last wills, living trusts, and tax-protected inheritance plans. It's all about legacy.
And now, it's time for the Talk Law Radio Legacy Spotlight. What's your legacy? Sponsored by Marquardt Law Firm.
Joseph, have you had any clients that just refused to buy life insurance when you knew that they needed it?
Yeah, that's something we've seen before when I was working with my father at that large insurance company. And my father tells a story a lot. It's a powerful story about basically him getting ghosted is what we say, but them avoiding talking to the insurance agent, which is something that's very common. It's even in that movie Groundhog Day where you kind of like the insurance agent's coming, you're like, I don't want to talk to you. But he kept persisting, and he really uses that to teach us the power of perseverance. And he kept calling, and he really knew they had that need for it, and it was really important that they get it. So finally, they broke down and they got the insurance. And, sadly, the husband passed away. But, on the bright side, they did have that insurance, which protected her. And when he went to the funeral, she made a point to go up to him and really thank him for sticking with it and persevering and making sure they get the insurance, because it really helped her out financially.
When should people buy life insurance? Before they die.
Yeah, true.
If you want life insurance, you have to buy it before you die.
Yes.
And so I want to make that known here, because people think, well, I'm not old.
Yeah.
I'm not going to die yet.
Yeah.
So I'll buy it when I'm closer to that. But they might not qualify for it, right?
Yeah. I kind of want to make a point on that if we have some time is sadly, I've had a few, friends, ex-clients, and clients pass away. One of them was younger than me who passed away. Really sad. Went to the funeral, but it kind of shows you, like, you never know what's going to happen. Another one was someone who went to church with me at an older church I used to go to on the south side, and passed away as well. And it really got me thinking about legacy. And then another one was a very dear client. And you really don't know, and you want to plan ahead for what could happen. That's why we have this comprehensive safety review meeting where we look at every risk that exists. And you may or may not have a need. Some people can self-insure. But if you do have a need, you want to set it up. And the cheapest time to do it is when you're younger. I know when I remember being younger, you kind of feel like you're going to live forever. But, death is a natural part of life. And you want to make sure you protect your loved ones. That's a really important legacy, is leaving things better than you found them. In the small things, he who is faithful in little is faithful with much. And with the big things like your estate, making sure that you give your family that peace of mind that they're going to be protected even after you're gone.
It's the responsible thing to do.
Yes.
Because if my wife and children have a need for my income and I pass away, well, I'm not working anymore.
Yeah.
And so how are they going to pay the bills?
Yeah, it's one of those things that it's not fun to think about, but you just have to think about it, a little bit, and just make sure you're protected. And then once you take care of it, there's such a peace of mind. I remember when I came to you to do my estate plan, when I came to do, our estate planning documents, it's not something that was fun to think about beforehand, but after I did it, there was such a sense of relief that, I don't want to die. I want to live a long life. But if something happens, my daughter will be okay. My wife will be okay. My son will be okay.
Yeah, I had a client that came to me during the COVID era. Her husband died of COVID, and they were young people. They had a baby. They had a mortgage. They had 2 cars with loans on those cars, and she had no savings, and there was no life insurance. And so what is she going to do? Well, she's probably going to sell the house, sell the cars, go live with her parents.
Yeah, it can force you to make bad financial decisions. Just like we were talking about with selling the farm, it's like you could have to sell something at a discount, be a distressed seller. Real estate investors target that because they know they're going to get good deals when someone's like a really motivated seller. You want to have that protection in place before the thing happens. And it's true of all planning. You don't want to think about it, but it's really important to think ahead. What can I do now to make the future better for myself and the people I care about? I think is a great way to build that legacy, one part of it.
Yeah. Amen. Okay, in the Sinners and the Saints segment, we were talking about the Slayer statute. That's what estate planning attorneys call that.
Yeah.
That law that says that a beneficiary can't benefit from a life insurance policy if they caused the person to die.
Wow, yeah.
And we've been talking about life insurance for business owners, for families with minor children, for families with disabled or special needs beneficiaries, for charities, for to pay the estate tax. There's one more thing I want to talk about, and that's the fact that the state of Texas protects cash value life insurance policy from creditors.
Oh, nice. Yeah.
So it's like a retirement vehicle that's protected from creditors, and so it could be a part of protecting your assets.
Yep. There's a lot of interesting uses of that. Another use I've seen that's very creative is using the cash value in life insurance as an alternative asset if there's a market downturn, and you use it to take loans out tax-free from it, so you don't have to sell assets at a discounted cost.
Okay, awesome. Well, thank you for joining me on Talk Law Radio today.
Yeah, thank you.
Tune in to Talk Law Radio every Saturday morning and Sunday afternoon at 4:30 p.m. Sunday on 9:30 a.m. The Answer. We'll talk to you later.